Hello and welcome to another update video about Dogecoin. Doge recently broke out of the Elliott wave triangle to the downside. The thing is, I'm starting to question if it really was a triangle wave, kind of something else is going on, because in a triangle you would normally expect quite an aggressive move to the downside. An alternative interpretation, and this is not yet aggressive, okay? This is not a very aggressive move to the downside here in wave 5. However, there is another interpretation that, however, isn't really changing a lot. In this scenario, this wave 4 would have been here. And then we are coming down in an ending diagonal, wave 1, wave 2, wave 3, wave 4, and one more low in wave 5. But it would also lead us lower. It would also take us lower. And the ideal interpretation, or the ideal scenario for this chart, in my opinion, is still for the price to go below 5 cents. Would still be ideal to go below the 5 cent mark, because this is the June 22 low, and all the structures that developed off this low are highly corrective. So they are very, very questionable, and they cannot really be trusted, to be honest. Okay, so the reason is that these three-wave structures to the upside, they do not really provide a good foundation for the price to move higher, and it will be very fragile if the price does it. Very low volatility, yeah, getting less and less interesting down there apparently for buyers, and it's very weak chart at the moment. Just been moving sideways since August, basically 2 weeks of just sideways, no, 2 months of just sideways movement. And because the price was consolidating in a very corrective fashion below resistance, which was here between 6.4 and 6.9 cents, trend continuation to the downside is and was preferred. Now, in the next movement to the downside, which I expect at least as long as the price stays below the E wave high, which is the end of the triangle at 6.2 cents. So in the next move down, it should take the price ideally to 5.4 cents, the previous A wave low, and then in the next step it could take the price to 5 cents, and then we are finally there. The thing is though, it shouldn't be complete there. Ideally we go a little bit lower, because we want a solid reset in this overall target range for this move down to complete. Okay, so at the moment, looking at the bigger picture, if I go to the daily chart, my take on this is that this is an ending diagonal, okay, and this diagonal structure could basically complete the bear market, but it could still take a little longer to complete. So we basically have a 1-2 setup here. The wave 2 topped in April. A wave 3 to the downside might still be unfolding. This move down was just the A wave, then a B wave rally into July, and this is now the C wave to the downside, okay? And if I just make that a little larger, so here's actually the C wave. And in this C wave, we are tracking a 5-wave move. And again, this triangle was just the 4th wave. Depending on how we count this, there should be at least one more low in this yellow 3rd wave, or 2 more lows. And then still afterwards, one more lower high and one more lower low. So anyway, what we're doing, we're tracking lower. I mean, I'm generally still watching the 5 cent level. As we get, or if we get there, okay, and then see some kind of a reaction, then we can start to track, okay, is a low in place? Yeah, but this is where I will be watching the yellow box. This is where we will start to really watch for bottoming structures. But again, we would like to have a reset below last year's low. Not much more to add here at the moment. Really, really boring chart. And this interpretation will not change until the price breaks decisively above resistance, which is at 6.9 cents. That's my update about Doge. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.